talk to you about affecting change with sustainable diapers in Venezuela. My name is Simran.
I'm Jeff.
I'm Kyle.
I'm Curtis.
And we're Risky Business, and we're here to help your business enter risky markets. So, the opportunity. What is the opportunity in a risky market for Venezuela? Well, let me tell you. There's zero competition in Venezuela. There's a huge market for diapers, and how can we fill that? That is our goal in Venezuela. There's also established product distribution channels within Venezuela, and there's an ethical opportunity for us with high risk and high return. We also are here to tell you about the general market overview in Venezuela. With the market, there is 35% on tariffs, which we included in our expenses and business model. There's also has been a 70% decrease in GDP from 2012 to 2018. Also, within Venezuela, as said before, there's a very huge market for diapers. Currently, in Venezuela, children use 126 diapers per year per child, which is an extremely low rate. And with this, there's a 21% child mortality rate. Also, the country has an E-level risk, which is the highest it can be, and it doesn't accept any humanitarian aid.
So in order to tackle these problems and take advantage of these opportunities, we wanted to come up with a business strategy and institutional framework to help guide us as we help enter this market. And so we came up with the triple bottom line model. This means we focus not only on profit maximization like a typical corporation, but also on focusing on people and the planet. So we're talking about helping the community and also the environment here. We have a goal under each segment of this bottom line. For people, our goal is to double diaper usage by 2025 in Venezuela, which in turn will help decrease the infant mortality rate. In terms of planet, our goal is to increase access to sustainable diapers within the country. And in terms of profit, we want to achieve a 16% market share by 2025. How we're going to help facilitate this is changing the entity structure of MaxiNet to a benefit corporation. While this doesn't legally affect the status of a C Corp, it just adds an extra layer and allows the company to focus not only on profit maximization, but also on having a dual mandate of working on improving the community they're working in. So the commitment here is not only to shareholders, but all stakeholders in the company, from the community to employees to suppliers and so on. In addition, the legal structure is the same, so there's the same free flow of capital between partners, and you can't accept donations tax-free like a 501c, so nothing changes legally, it's just voted on by the shareholders. So to begin our process, we looked at the exclusion of traditional Latin America suppliers in order to help us find one that met our triple bottom line requirements. Our critical supplier criteria included first, sustainability. This meets our planet aspect of the triple bottom line. Then we looked for a supplier with a small market cap or small net income margins in order to look for someone who would be willing to take a risk in a risky market. Naturally, big conglomerates are not going to want to enter a market with high downside risk when the returns are marginal. And last, we looked for someone with willingness to expand, which led us to our supplier.
Thank you. Our brand positioning in entering Venezuela is sustainability at the start. So the supplier that we recommend partnering with is a company called Eco by Navy. For Eco by Navy, all their products are 100% biodegradable, which considers the fact that we don't increase waste when entering the country. The company is also business to business and new market friendly, in that they are very open in working with new partners, as well as entering new emerging developing markets as well. They also have synergistic corporate values in that their willingness to provide great products to help sustainability coincides with our brand positioning as well. They are also the market-leading diaper company in the eco-friendly segment, and they provide excellent products and excellent service. In terms of logistics and shipping, because their products are produced in China, in terms of transportation, we'll be doing sea freight from China to Venezuela directly. We'll be able to put about 34,560 diapers in one 20-foot equivalent unit container, and on average, each container is about $500. In terms of the time taken from China to Venezuela, it takes about 50 to 60 days in terms of shipment, plus 7 days for onloading and offloading. Finally, in terms of our distribution channels within Venezuela, we have traditional routes from supermarkets, pharmacies, convenience stores, as well as detales, which are small informal stores commonly found in Venezuela. In terms of our institutional distributors, we'll be working with private hospitals and medical clinics, and in terms of NGO donations, we suggest working with the organization Giving the Children Hope, and that 1% of total diapers in year one will be donated at about the equivalent of 50,000 diapers.
So our awareness campaign, how do we affect change? Our goal is not only to maximize profits, but also to create a social impact. And our idea of doing this was through an awareness campaign. We would partner with Eco by Natty to affect social change. Currently, as stated before, in Venezuela, there's 126 diapers per child per year, which is an extremely low rate. Additionally, there's government and military officials who take these diapers from the markets, sell them in bulk, and also use price gouging and sell them on the black market, so they're unaffordable to the people who need them. With this, we wanted to place this image on all our packaging with the phrase "Déjanos vivir," which means "let us live." It is similar to the concept of smoking kills, which was done in Europe. It was placed on all the packaging of cigarettes to deter people from buying cigarettes, as it was unhealthy. So with this, our goal is to increase empathy for child mortality and increase solidarity for those who are enduring the same pain of their children's loss, and to deter price gouging from these government and military officials. Our overall 5-year goal with this awareness campaign is to double diaper usage.
So now that we have this goal in mind, we have to look at how it's feasible. Here we have a matrix talking about the current supply, our target demand, and what a demand would look like in a developed country. So if you look at the top line here, the segment population is the same across all three matrices here. So that's 3 million, which is the 0 to 3 population in Venezuela. So we're using that as our baseline. In a developed country like the United States, one child uses 2,500 diapers per year, which would lead you to 7.5 billion in demand per year. So the current Venezuela supply, as Simran mentioned, is only 126 diapers per child. As you can see, there's a huge discrepancy here, which is a market void that we look to fill. Of course, we're not going to get a country like Venezuela up to numbers of a developed country like the United States. So our goal is to double that within 5 years of entering the market, which would put us at 252 diapers per capita. Timesing this by the segment population, we would end up with a goal diaper distribution of $756 billion diapers. This desired market share would lead us to 1/6 of the overall market is our goal here. So then we would end up with 126 million.
So now, to do a big project like this, you definitely need a lot of capital. We decided the best way to do this would be a 30 to 70 debt to equity ratio to counter the high cost of loaning money in this country. The debt would come from Goldman Sachs, a bank loan, because they have a strong history of doing FDI in emerging markets like Malaysia and Puerto Rico. And then 30% would come from maxing net equity. Additional 30% would come from different foundations, private foundations such as Save the Children Foundation and Gates Foundation, which would put up 20% and 10%. And then the final 10% would come from 2 different government programs that promote sustainable change in foreign markets.
Thank you. 2 charitable sources that we recommend partnering with is the Save the Children Foundation and the Gates Foundation as well. Not only will your company benefit from getting the funding from both foundations, but these 2 foundations will also benefit in that their money will go towards projects that coincides with their values. For Save the Children, the money will go towards projects that will reduce child mortality and increase child health. And for the Gates Foundation, it will go towards projects that will increase the overall development of the country. In terms of government grants, 2 grants we can get are the Grand Challenges, which is a research institute started by the Gates Foundation, as well as USAID. Similar to this, your company will get the funding, and these 2 grants will help go towards projects that coincides with their values as well, overall in the development of new countries, as well as impacting global health.
So here's some important financing numbers. We ran a sensitivity analysis on the net present value and got an average of $11.3 million, which is a really good return. The weighted average cost of capital is at 13.76%. This comes from the high rate of 24% that interest would be charged on the debt, and then also the high market premium on the equity of 21%. Total margin that we calculated would be about 8%, which is close to the industry average of 7 to 9%. Debt to equity ratio, like I mentioned before, is at 30 to 70, and the payback period of fixed costs is 10.87 years. This comes from the production numbers that we'll go through later, and then the variable costs are calculated in there as well. The $10 million total funding, we calculated out the expenses that would be used for this. Majority would go into tariffs at 35% on produced goods, which is very high, but it's a Venezuelan rate. And then 29% would go to transportation of getting the goods from China to Venezuela. Is very expensive on all those containers. 15% is soft costs inside Venezuela, such as administration and lawyers and contracts. 10% soft costs outside of Venezuela, which is expanded in administration. When you go into a new market, you need more administration and lawyers and contracts. And then the remaining are smaller percentages such as marketing, development of distribution channels, and then a very small amount for foreign exchange arbitrage.
So now that we have an understanding of the financing costs, we need to look at where the profit's actually coming from. Our profit distribution for one diaper sold, 50% will go back to our supplier, Eco by Nady, 20% will go to MaxiaNet, and then 30% will go to the respective retailers within Venezuela. Now looking at our margins and pricing strategy, as Kyle mentioned, we have an 8% margin on each diaper sold, which comes out to about 2 cents or 30 Venezuelan bolivars. We're using a penetration pricing model, so we're flooding the market with high supply in order to cater to the demand at low prices, and that's what's creating these thin margins of 2 cents. But with the vast supply, we are able to make up a lot of the equity investment and the payback period. We're going to use a mixed currency approach of selling in US dollars and VEF in order to help counter against inflation, because the US dollars are accepted as legal currency within Venezuela. This will also help cater to both the rich and the poor who may or may not have access to dollars. And then, in order to further hedge against inflation, we have a protection through 5-sector plan, which Kyle will now discuss.
So we decided to hedge against inflation through a five-sector VF asset allocation fund. 40% of the VFs that we would get would go into commodities, especially in agriculture and corn. And then 20% would go on the spot rate exchange, which immediately we would change the Bolivar to US dollars at the rate that we could get. 20% would be a 90-day Forex rate on the Forex market, because you want to diversify against just the spot exchange rate. If something goes wrong in the spot market, then you can pull back and go into the 90-day. 10% would be on the gold 90-day forward contracts, because this would be, historically in emerging markets, gold trades more sustainable and equal on forward contracts, especially in 90 days to 120 days. And then the final 10% would go into crude oil direct investment. This is such a huge part of the Venezuelan economy that, and oil is just going to go up with all that's going on in Saudi Arabia right now, that we've decided it to be an important part of our hedging strategy.
So now onto the pre-implementation schedule. Before we enter into Venezuela, we have to have some things in order. And that involves establishing our funding from charitable and government organizations. And also after that, we would like to create a business strategy with Eco by Nady, which includes our awareness campaign and to meet those goals of the triple bottom line. After this, we would like to coordinate strategical production amounts and cost of what to place in retail, how many to place of each in retail. We would like to leverage our Venezuelan distribution network to move products, which includes shipping costs and where to place them. And finally, we would export to Venezuela. After this, we now have our implementation schedule of what to do in Venezuela. We'd like to start by selling at certain volumes from year 1. We'd like to start by distributing 40% of our product volume, because we don't want to put all of our market volume in a risky country and start off with, and also it could cause high competition as we enter the market. We'll start off with 40% at year 1, increase to 50% at year 2, 60% at year 3, 80% at year 4, and finally 100% at year 5, where we'll distribute our entire product volume of 756 million diapers per year, and continue that onwards. So this is our entire journey to Venezuela with Eco by Nady, and I'm going to walk you through our entire process. We started by identifying the supplier that encompasses our goals, the triple bottom line. After this, we decided our supply chain and distribution channels through Venezuela, which includes the shipping routes. Along with that, we did our awareness campaign, which was the social impact of how to affect change. We then figured out financing from charitable and government organizations and calculated our expenses and profit distribution. And finally, we're exporting to Venezuela at a certain rate per year, and at year 5, we'll be selling at 756 million diapers per year in 2025 and onwards. Thank you. Thank you for taking the time to listen, and we're open to any questions.
You mentioned that your recommendation for the diaper for Eco, it's a biodegradable option, which you posed as a benefit for the region, but biodegradable also implies that you have to have recycling resources. Did you happen to look into or plan for recycling of a biodegradable product in the region?
I think we primarily wanted to avoid just more waste in the country. So we determined biodegradable would be better in that it wouldn't just go into landfills, or a big problem right now in Venezuela is they're just like throwing them in the street. And so biodegradable would eventually create a market for more recycling, because as far as I'm aware right now, there's not a huge recycling market there. So giving the recycling industries an option to come in and have stuff to recycle, this would be beneficial to them.
And what was the cost then for the Eco brand?
They came in for production at 26 cents. Yeah. This doesn't work very well, so.
One more? Tell me when.
A little more.
Okay.
Sorry. Inflation margin calculation. Yeah.
Yep.
So the market price of an Eco diaper is 40 cents per unit. Got that off their website. The average wholesale discount is 20 to 50%. We came in at a low margin for that because it's just to be safe. So that would give us a price per unit of 28 cents, with the average margin being 8% in the industry. So we calculated that to be about 25.67 cents per diaper that costs them. And then so if we sell at 30 cents, we would make an average margin of 2 cents per unit additional to theirs.
For the B Corp
Yes.
component, so the B Corp, becoming a B Corp would enable Maxianet to accept charitable donations directly?
You are allowed to accept donations as gift. They are not tax exemptable unless you're a 501c. A B Corp is essentially an additional designation to being a C Corp. As I mentioned, there's no external validation or anything. It's just decided by the shareholders and the board, and it just gives you the leeway to not focus solely on profit maximization. So in that sense, you'll still be taking grants, and you'll have to pay taxes on them, or otherwise you won't be able to make a profit. You'd have to become a 501c or a nonprofit.
Understood, so it's a mechanism for us to get a supply?
Yes. Yeah, that's how you would get, be able to sell at a lower price range to Venezuela because of the grants that you would get from the Gates Foundation and Save the Children Foundation.
Right, and in that sense, you're not legally bound to your shareholders to fully profit maximize in the market that you want to also affect social change in. So you may have to go in at a lower price.
And what are your thoughts then as it relates to the price of the product being accessible to the Venezuelan market at present in its current conditions?
We looked at the average prices of the diapers that were in the case at the end, and we fit in right in the more premium side of the diapers, but also nowhere, like we're right there. We're not shooting way above their prices, we're in with them. That's why we picked the 30 cents at the low margin of 2 cents per diaper, so that we could fit in right in with them.
So that would be considered in like more of a premium
Well,
positioning, or?
so compared to the government and military price gouging, these are extremely affordable, because right now they're at extreme rates that no person can
Nobody can
afford
afford a
on
diaper,
the black
period,
market,
right. Yeah.
correct?
Yeah. So as of yesterday, the spot rate for the black market was 19,000, and then so if you're paying for a diaper at that, you're paying 20,000
A
times.
stack of?
Yeah.
Yeah.
Okay, and then the unit size or pack size, did you address that?
Yes.
It's in the shipping.
Maybe I missed it.
It's not in this slide, but yes, we addressed this, and we sell from packs. The smallest pack they make is a 10 pack,
Okay.
and they make a 30 and 50 pack size. So we'd sell in the 30 pack range.
In the 30 pack range?
Yeah, and that's how we did the calculations on how many diapers. We got the size of the pack and then did it.
And what's the thought process behind the 30 pack, why not the 10 or the, whatever you said, 50, 60?
Well, because it's difficult for people to get to the store, so we don't want to sell a 10 pack. If they have to go to the store multiple times a week, especially if they only have like one diaper per day. So they have to go in once a week basically, or more if they use enough diapers, as they should. And then the 50 pack is, they don't have enough disposable income to go in and buy this huge pack of diapers. So we went right in the middle in that they don't have to go to the store every day, but then they also don't have to come, like they don't have to make this big investment.
So I like the idea of partnering with the wholesaler. The only two particular concerns, if you could address that for me. Number one is the trade wars with China. So is that you have you buffered in some sort of a tariff expense, and then number two is, you're putting all your eggs in one basket with this one wholesaler, so what's your fallback if they explode or something like that happens?
I'll address number one on that. And you can address number two.
I can address, sure.
So for the first one is they're a Swedish company, and they give us the product outside of China, right at the port of International. So they get around the tariff wars because they're not an American-based corporation.
In regards to number two, yes, all our eggs are in this basket. However, Eco by80 is a relatively stable company, being in the, if you could go to the Eco by80 slide. And there it is. We have confidence that they're very solvent, so we're not worried about them necessarily going under, and they're always looking for opportunities to expand for their website. So they're actively trying to enter new markets, and we feel we naturally fit that niche. Looking at the other conglomerates that would be alternatives to this, we see companies like P&G that have actually exited the Venezuelan market because it's simply not feasible for them. So realistically, we have to look at companies like this that are willing to take a risk in order to grow their business, because the margins simply aren't there for these large conglomerate companies which effectively control 90+% of the diaper market.
Do they have a Latin American presence currently?
They do not.
They do not.
They do not, but they have an American presence, and all over Europe as well.
They sell in dollars on their website as well.
Yeah,
Okay.
they're the global leader in eco-friendly segment, so they're
So-
not so small.
Sorry, no.
You're good.
I think Summer and I wrote down the same thing. Can you go back to the 10.87 years for the basic
Payback
cost
period?
repay?
Yeah.
What does that mean specifically?
So we calculated the margin per unit, and then we took that into and discounted it, like kind of did an NPV analysis on it, but then took the $10 million that you have and took on the amount of margin discounted for the time value of money, and we pay back the total fixed cost of $10 million in 10.87 years.
So the investment for the company, if they're not gonna get their money back for 11 years, is that what you're saying?
In full.
In the full, yeah, yes.
And what are suggestions you have that may be able to cut that payback? Anything over 5 years, in my opinion, I'm a financial guy,
Mhm.
anything over 5 years seems a little risky, so how do you, give any suggestions on how to reduce that?
You could raise the margin, but our main suggestion to that is to add the wet wipes. It's not in the slide there, but after you get your presence in the market, wet wipes have a much higher margin, about 20 cents per pack in the US, and you could reduce that down to 10 cents per pack. It's like a 200% margin or something, and that would bring that in with the diapers through the same distribution channel, because they're under the same tariff, so you don't have to separate your shipping costs at all. And that would make your margin, payback period would come back a lot quicker.
In addition, investors are aware that Venezuela is a market like almost no other in the world. This is a very risky investment naturally, so taking an industry average of say 5 years for a payback period, you're going to have to adjust your expectations for that for any investor looking at this market. And that's why a lot of our capital stack comes from grants from the US government and different aid programs, as well as different foundations. Places that are looking more so not at their bottom line, but in order to affect change in a country. So no, this would not necessarily be an investment that a traditional lender may look at, or equity investors, and that's why a lot of our capital stack is focused in those non-traditional routes.
Feedback, really good on the general market overview and the goals, laying that out at the top. I thought that was really well done. We got alignment really quickly. Whoever says the statement about the biodegradable, address the recycling component in there. Don't spend time on it, but immediately, like Venezuela does not have recycling programs right now, which is something we're looking at. So maybe you just say that could be something that could be an added, extension or something, but real quickly, don't focus on it. I loved the let us live kind of component. You spent just the right amount of time on it. On the utilization of expenditures slide, the legend on the right, just make that more white, like visually. I'm just talking visually so that people can see it in a big room. And then when you say the B Corp, I am very familiar with B Corps. I've worked with them, but maybe define what the B Corp is. You did it, but if I have the knowledge base,
Sure.
say what the B Corp is, or isn't, or maybe even just say a company like, so that someone
Gotcha.
might have a reference point. And then the hyperinflation stuff I liked because Maxiana actually does Forex analysis, so it was a nice alignment that you've actually did that. And then lastly, the pre-implementation schedule was very nicely laid out, that you had really thought through it, reflected you about through it. I think I spent the whole minute to let him go.
So I think the other individuals in this group will know that I'm a tough grader. I thought you guys did a fantastic job. Very well
Thank
thought
you.
out. I could feel the comfort and the confidence in each one of your voices. Like I said, I'm a financial guy, so the analysis was very, very well thought. I love the fact that you found a supplier or a wholesaler for your partnership. Again, there are some challenges there, but you guys did a fantastic job.
Awesome, thank you.
Thank you.
Thank you.
Thank you, risky business.
Thank you.
Thank you.
Yeah.
Thank you. Thank you. Thank you.
Thank you.
Pleasure.
Thank you.
Thank you very much. Thank you again very much.
Thank you.
This might be new batteries or something, 'cause I was
Oh,
pressing
okay.
it perfect.
The last one.